So becoming your own banker is not an investment. It's not like, do I choose to do real estate or do I choose to do IBC, Infinite Banking Concept? It's an asset, becoming your own banker and do whatever you are doing. So without changing the objective, without changing the cash flow.
Hey, JinJin, it's been great chatting with you. I'm excited to have you on. I get to interview you on infinite banking. So tell us a little bit about yourself and tell us what infinite banking is.
My name is JinJin. I'm an Authorized Infinite Banking Practioner through the Nelson Nash Institute. Before my role as a practitioner for practicing IBC, I was a real estate investor. In fact, I'm still a real estate investor, but it's very passive. So on the other side, I practice becoming my own banker and also help Canadian families and business owners to become their own banker as well.
So what is infinite banking?
Infinite banking concept of becoming your own banker is not an investment. Think about banking, right? It's really about how we go about buying things. I would really refer to this book, Becoming Your Own Banker by R. Nelson Nash. This is where we coach this concept online. And awesome.
This book?
Yes, this is a book.
Awesome.
And this book is actually a text of a 10-hour seminar where Nelson teaches this concept himself. So that's all in the text. It really begins with how you think. For real estate investors, we look at banks as if this is where we get the other side of the leverage, right? We put 20% and the bank is the one that put 80%. Now, bank is more than just who give us the financing, who give us the leveraging. Banking is a process. It's about how we go about flowing our money with that. I don't know if that answers your question. I can use example. For example, every dollar that we spend, you either spend by cash. Now, when you spend by cash, you not just spend this $1, you also lost interest for this dollar that you spend. This opportunity is gone, right? Yeah. As real estate investors, we like to borrow this $1 to go for anything. But then when you borrow money, you have to pay interest. There's no other way around. Think about it.
Right.
Everything that we go in life, no matter purchasing real estate or doing investment or just buying a car, everything we do is either pay up, which means that we pay interest for someone else, or we give up. We spend cash, then the money is gone. So becoming your own banker is really about the better way where you can recapture interest. Maybe you don't understand exactly what does recapture interest mean, but really, if there's a way that you can get all this interest you're currently paying to someone else, and you can recycle and use this money again, would that put yourself in a much better financial way compared with how you're doing today, right now?
Okay.
So this is the essence of becoming your own banker.
Yeah, well, I like what you said about pay up or give up. That's a really simple, it makes sense. So you're saying I've got $1 and I spend it on something, I'm never going to get that back, right? Or if I borrow $1 from somebody to buy that same thing, I now also have to pay interest.
Exactly. You're slowly giving up on the $1 as well.
Right. So essentially it's your money's eroding is what you're saying.
Exactly.
Explain to me. So I've got my own bank and I've been able to save up. I've made that dollar add up and multiply. Now I've got $10,000 in the bank. How does that work?
It's a great question. Let's assume that now we have $10,000 and we wanted to use this $10,000 for a creative deal that we wanted to do. Right? Now, this deal could be anything, could be a piece of property, could be a piece of a private lending deal or anything. Now, when we spend this $10,000 traditional way from our checking account to do this deal, now this deal could earn us X% of rate of return per year, correct? But what happened to your $10,000?
It's in the deal.
Exactly. The $10,000 gone from your system is with the deal. So the deal itself is earning you X% of interest, but your $10,000 for this year is earning you 0% of interest.
Okay. Yeah.
So the best way to have it is if I have this $10,000 saved in my own system. So now I can borrow from my own system, go by purchasing this deal or invest in this deal. Now, at the end of the year, or however many years this deal could be, for real estate, maybe 3 to 5 years for rent to own deals, for example, I get my $10,000 back. but I never lose a time that my money is continue to grow in this 3 to 5 years.
Okay.
So really, my money is doing two things.
Wow.
So becoming your own banker is not an investment. It's not like, do I choose to do real estate or do I choose to do IBC, Infinite Banking Concept? It's an asset. Become your own banker and do whatever you are doing. So without changing the objective, without changing the cash flow.
If I've got the 10,000 in the bank, I can withdraw it and lend it to myself into a real estate deal. And let's say that deal is earning 14% interest per annum.
Yep.
So that's making 14%. Am I, from my own bank account, when I lent it to myself, am I charging interest on that as well?
Yeah. So yeah, because every capital has a cost to it, right? So if we borrow money from the bank, we have to pay bank 4 or 5%. Then when we borrow money from our own system, we should pay money to ourselves as well.
Okay.
Now, when you find out more about this concept, you will know that you were able to recapture all this interest you're paying because you are building an asset that is growing every single day. Let me give you an example. Like I have a system that I have for my own banking system where my policy grows $8 a day. And I need to access this money, even with 6% or, whatever this rate is, not really about the rate, it's about the volume of interest. For me to borrow $10,000, even let's just assume it's a 6%, then for the whole year is $600, right? So for each day is less than $2.
Yeah.
So if I have my system growing $8 a day until the end of time, and I get to access this money for $2 a day.
Right.
And my question is, how many days do you want to have a deal by using your own system?
Wow, that's really cool. So what sort of examples have you seen people use infinite banking for?
The answer is actually infinite. Then I think that's why Nelson wanted to use it as infinite banking concept. Personally, I've used it for everything. As real estate investors, for example, we know that if I have enough money now, $10,000 may not be enough to become my own banker and fund the entire deal. It might take a little while for me to accumulate enough money. So literally, I could get rid of the bank if I have enough funds for the entire deal, right?
Okay.
So that's one way I could do that. So right now I'm paying $2,000, $3,000 a month for this deal. Now I'm paying back to my own self, right?
Wow.
So literally I can be the bank. Now the other way we can look at is really like what I used the example earlier, like every dollar, right? Think about how we manage each properties, right? We manage cash flow for our investment deals. We have to save the positive cash flow for emergencies or for that hot water tank eruption that we were just talking about, right? So what happened is when we have to do the repair, we've been saving our money and now we have to spend, $4,000 for this hot water tank. What happened to our bank account?
Yeah, it went down by $4,000. That's a big hit.
How many months does it take you to recover that $4,000?
Yeah.
So instead of me pulling money, withdraw money from the system, I could use infinite banking concept, right? I could use my own system to pay for this $4,000. And for every month or however many months, let's say for the next 10 months, every month I'm saving $400 to put back to the system. I never lose this 10 months that my money continue to grow. So I use it for everything for each of my property. I use it to manage my cash flow for each of my property. So that I no longer have the up and down.
Yeah.
I can, imagine you're building an asset at the same time. You can still have access to the money to finance all those things.
Yeah. I think that lots of investors, especially newer ones, struggle with cash flow management. I've been there and, what you're saying makes a lot of sense. But the fact that not only can you manage your cash flow now, but you're continuing to build this asset over here while you're running your real estate deal here, that sounds very attractive. So do people use this to purchase cars or is that, because cars is a liability, right? Unless if you're buying, a one of a kind and it increases in value. But do you see people buying cars using this strategy? This
strategy is perfect for car because everybody needs a car. I really like that you mentioned car example. Sometimes real estate investors call me and they will ask that, I can't become my own banker. I live in the GTA area. How can I become my own banker? Then we will ask, how do you go buy a car? They will say, I finance a car, right? So traditionally, we purchase a car either by financing or leasing, right? Which means that we access someone else's pile of money to achieve the objective of purchasing the car. But what we do is every month we're paying $500, $600 to slowly pay up for this car.
Yeah.
And for that $600 a month, can you reuse that money again? No, it's gone, right? You're slowly giving up. Yeah. Or some people like to purchase car. They say, hey, I paid it off by cash. Yeah. But then what happened to the cash? Is gone as well. So both ways, your money is gone.
And devalued.
Right. So the best way is that if you have enough money accumulated in your own system, you can use that as a form of a policy loan, which is a collateral of your cash value, put a lien on your death benefit. It's very similar with real estate. It's like, we collateral on our house and then the bank gives us mortgage, right? So you can access money through a form of policy loan to achieve purchasing this car. Now, every month, $600 you're paying back as a policy loan repayment back to your own system.
Yeah.
So my question is, when you pay back $600, can you reuse the money again?
Right. Yeah.
So for every dollar that you spend on the car, you can reuse it from the system. And sometimes I ask a real estate investor is that if your $50,000 car is you financing yourself, and this is becoming your own banker, is a private, it doesn't show on your credit report. Would that help you financially to qualify for more mortgages or expand your portfolio? People say, yeah, then start with something small, right? If a house is too big to think about the cars.
Yeah.
And all the cars you might have to buy for the rest of your life.
Well, that's just it too, right? You think about when if you want to buy a new car with cash, you can get a better deal, but the money's devalued so quickly. So even if you don't have $50,000, but you want to buy a $15,000 car. I'm thinking off the top of my head because I haven't done this yet, but it's like if you were to buy a $15,000 car, but you had the cash for it, then you could start doing that right away. And now you start building that infinite capital, right? That's how you can do that. So
it's capital that you can control, you can deploy, and you are the banker. You decide the term to pay back. In the term of, pandemic, if you cannot come up with the payment you have a short, nobody's gonna go after you, right? If I have a great cash flow this month, I could pay more, right? Because whatever payback, I never lose the option to reuse that money again.
Wow, that's so powerful.
So I strongly recommend to read Nelson's book, because Nelson says nobody can get a better rate of return before first controlling the banking function in your life. So this is not a conventional way of thinking, but it's not about what we do with our money, but it's really about how we go about doing what we're already doing and create financial tailwind and push you ahead financially.
If I'm my own banker and rates have been lower, now they've recently doubled, if not a little bit more, how do I set rates for myself with my infinite banking?
That's a great question. When we borrow someone else's money, for example, we borrow for the commercial bank's money, and they are the one deciding what the rate is, right? So really think about it. Do we have control, right? They decide, okay, we double the rate. Now you have to pay this amount. But when we become our own banker, the life insurance company will charge us policy loan interest, right? But that's not as volatile as the market. So really, we can set our own term of what is the rate of return we wanted to pay back. So you decide on your term. You can pay back longer if you wanted to, reduce your monthly cash flow.
Right. How is this reported with the CRA when you do your annual tax return?
So this is a private contract. When you set up, you're becoming your own banker. The tool that we're using is through a special designed participating dividend paying whole life insurance. Just like when we are doing real estate, our tool could be the single family houses, and that's just a tool, right? Our objective is to create financial freedom, right? So it's the same thing for us to become our own banker. The best tool is out there is through participating whole life insurance policy. Now, a policy with a life insurance company is a private unilateral binding contract, which means that it could be private. If you don't want CRA, nobody could know there is a contract available. So in another sense is creditor protected, and then you can control it.
As a real estate investor, especially as you grow, asset protection becomes a very important subject. And to hear that it's private, and that's a very powerful way. Now, can you pass this on to your generations?
Oh, that's a fantastic question. We usually say this is a family banking system, right? In fact, that, when we invest in real estate, we always know, you have to really think about if you pass away, what is your final tax bill, right? I like Robert Kiyosaki because you mentioned about Rich Dad Poor Dad book. It's not about how much you make, it's about how much you keep. It's about how many generations can keep this money, right? So you think about this life insurance policy, this tool is fantastic because there's not many things that are tax-free. So the cash value growing within your policy is completely tax-free when it's growing inside it. And when you pass away, the death benefit is absolutely tax-free, goes back to your next generation. So think about that final tax bill. Eventually we're going to face, then what is a better way to have life insurance company to pay for that bill for you. So for me, like our family banking system, every single one of us at Ascendant Financial, we are all authorized infinite banking practitioner, and every single one of us practice in our own lives, and we all own our privatized family banking system. So I have policies on myself, on my husband, on each of my 3 children. I actually just had a policy for my mom. So I, just like when we invest in real estate, we don't want to put the eggs in one basket. I also spread that in different members of my family. You can have a policy on your joint venture partner, right, to protect each other. And when the deal is done, you can decide what you wanted to, make this. You can start with a term and you can make that as an infinite banking policy. There's lots of ways to do it. The whole idea is to keep the money in the family.
It's fantastic. This is, my mind is spinning with ideas and opportunities.
Yeah, so compound growth is fantastic, but thinking about uninterrupted compound growth, because when we have our money in someone else's banking and we have to use money, right? We have access fund. Whenever we access fund, we interrupt the compound growth. So think about if you have your own system that you can have your money growing uninterruptedly, that compound is powerful for later on for our age, for retirement or passive income, or for next generation, right?
I love creative deals. I love learning new stuff about money, about people, about structuring stuff, and talking with you today, JinJin, has been like that. It's been eye-opening for something that, I've heard of. This is great.
I also appreciate your expertise because I know that time, money, and knowledge are very important. And I appreciate that how you are so knowledgeable in terms of creative financing or these options, because you've spent a lot of time coaching and researching. I believe you must spend a lot of time in this area. And the same is for infinite banking concept. You probably need to spend a little bit of time to dig into it, and because it's so not conventional, so sometimes we focus on some things like a rate of return or things like that. Our consumer brain is fighting us because, our conventional financial world, they want to have the control of the money instead of you. So what's a better way to have this financial control in your hands and to have money growing in your system where you can still have access to it? It just enhance everything that you're doing.
Want to learn how creative real estate investors do deals without the banks? Check over here.